It's been a wild ride in the markets over the last week, for that matter, over the last month. And much of it this last week has had to deal with the Trump administration's various actions and statements about trade policy. To help us sort through it all now, we welcome Richard Turnill, BlackRock Chief Investment Strategist. Richard, welcome back.
Great to be here.
We're putting this chart up again. You saw it a little bit earlier in the program. And just to explain to the audience, that big dip down back in early February was when we had that big number come in on wage increases and the volatility crisis. Then it came back up, and now the most recent dip has been on the trade events. Is the trade think they've been taken care of? Because it's interesting, the pink line is the 200-day moving average. It's always bounced off of that and come back.
So what the chart shows very clearly is we've moved into a very different market environment in 2018. The market's been concerned initially about higher rates, about higher inflation and higher real rates. That's what drove the volatility back in February. In the last week or so, that volatility has been around trade concerns and the potential implications that will have for growth going forward. What we think is most important, though, is if you look through that and you look at what's actually been happening to the economic data, to the earnings data around the world, we remain in a sustained and synchronized global expansion. And our view is that investors should look through some of this short-term volatility, focus on those fundamentals, and those fundamentals still very encouraging.
So is this a signal noise issue, basically? I mean, whether it's the trade talk or whether it was the 2.9 number that we got last month, is that basically noise and the signal is more steady?
I think the signal is steady. I think there's reason to focus on the trade issue in particular when we think about what could derail the global economy from this very positive environment, again, sustained, synchronized expansion around the world. What could knock us off that very constructive path? And trade is really very high on our list. So if this were to escalate into a full-blown trade war, we've seen in the past that has the implication not only to hit directly through trading goods and services, but also to hit confidence globally. So I think investors are right to focus on this issue, but we're not yet seeing any signs that this is escalating beyond tensions and beyond market sentiment.